Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank using the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sarah Ibrahim. For today, I have a special guest with us. His name is Christopher Swartz. He's one of the managing partners with First Choice Mortgage Advisors, LLC. He has spent 15 years in the mortgage industry, serving a wide range of clientele, providing them with various residential mortgage loan products. Christopher specializes in conventional, jumbo, FHA, VA, and renovation mortgage loans. Christopher has completed specialized training in renovation mortgage lending. He graduated from Cabrini University with a Bachelor of Arts in Organization Business Management. Christopher was nominated by Mortgage Professional Magazine for their Young Guns Award for mortgage professionals under 40 who are making big waves in the mortgage industry. He was a back-to-back five-star Mortgage Professional Award winner in 2018 and 2019. He was recently featured in March 2019 edition of Forbes Magazine as market leader. He was one out of 8 mortgage professionals out of 4,996 in the Philadelphia area to receive this reward. He is the host of the Few podcast and the Financing the Dream on CNBC. Christopher lives in Media, Pennsylvania with his wife, Lori, their 2 daughters. When not working, Christopher likes to travel, fish, and just relax with the family and friends. Chris, welcome to the show.
Thank you so much for having me. Sorry, that was a mouthful there. Thanks for getting that all in. I appreciate it, man.
Oh yeah. Thanks for joining us. Before we jump in, I want to talk more since we're a show on financial literacy and financial the subject of finance. I want to talk about the whole lending world. But before we jump into that, can you tell us about your background, how you got into the space?
Sure. Yeah, absolutely. So I kind of stumbled into the space, I guess you will. It was I guess, early 2004, 2005. I was in college, working my way through college, and during that time, I was in a sales career doing outside business to business sales, which, for anybody that wants a nice education in sales and just people saying no, go outside B2B sales. It was really really humbling, but I did really well. I took that money, I invested in real estate. We bought some houses, we did some flips, we had some rentals. And it wasn't anything special at that time. I feel like everybody was an investor. It was during the boom. Anybody that could fog a mirror could buy a house. But fortunately, I did really enjoy it. We did it, what I'd like to say, responsibly. I mean, I was too young to know or get involved in any of the craziness that was going on in the industry. We just continued to buy and sell houses, and a friend of mine asked me, he was doing the loans at the time. He said, "Hey, I'm looking to open up a mortgage company. Would you want to be a silent partner? And you've already, done a bunch of loans with us. So, you understand the process." And that is kind of how I stumbled into, was supposed to be a silent partner, and then just got more and more involved. Really enjoyed the industry, loved helping people, and was able to transition from my full-time W-2 job with paycheck benefits to, just going out on my own. And so that was kind of how I got into the mortgage business in around 2005.
So what is your opinion on the word sales? Like, what does that mean to you? Like, if I came to you and I said, "Hey, Chris, what does it mean, like, to be in sales?"
Yeah, this is a great question. I mean, to me, it means to help somebody achieve the objective that they're trying to achieve. I think sales people in general just kind of, it's like, with has almost like a dirty word, like it's this negative connotation. And it's really, I'm not saying that doesn't exist. We have obviously Hollywood that likes to sensationalize the Wolf of Wall Street type stuff. And, so that gives people that are truly in sales, that care and want to help people, kind of lumps you into that dirty category of sales. Like you're trying to, psychologically manipulate someone into doing something. For me, I think of sales as, providing education to help someone achieve their goal or dream. That's what sales is to me. I'm not going to force anybody's hand into making a decision to say yes or no to something I'm doing. I'm going to give you the information to allow you to make an educated decision. And hopefully through that process, should you choose to move forward, you would pick me.
Definitely. I agree. I think that's exactly what I had in mind. I think like sales is like helping people, like conveying certain messages and education to lead people to the direction that they want to go to. You're pretty much a bridge for them. You're connecting them to what they want and what they need. And you're right, like sales has definitely had like a negative context where it's like you think of like somebody going door to door, like stealing from people or something like that.
Right.
So
Yeah.
so so
Yeah.
I and if you agree, Chris, I think that everyone is in sales. Whether you're a doctor, you're a lawyer, you're an engineer, you're an architect, you're a teacher, a parent. You're always selling. You're always in a situation where you have to convey what you're thinking in your head to kind of express your opinions and express a certain direction that you want people to take with you.
Absolutely. I mean, we start in sales at a young age. I mean, if anybody out there has kids,
Yeah.
they are the best saleswomen out there, right? I mean, these kids, like they are the negotiating, for whatever it is that they want. And that's like human nature, right? You're already at a young age, like you're in sales. My kids are, selling me on, the things that they want to do and say, and I'm going back with my rebuttals. And so whether you know it or believe it or not, we're all in sales in some capacity, and it starts at a very young age.
Absolutely. Yeah, definitely agree. You mentioned also that when you started off in the lending business, you started off as a silent partner. What does that mean to be a silent partner?
Well, that basically meant to invest money
Mhm.
and just kind of fuel the business and continue to go about my life without having a day-to-day involvement in the business.
Mhm.
Um, and that just didn't work for me. I'm a hands-on person. I like to figure things out. I like to be involved. If my money's invested, I certainly like to be involved. So it was good in theory, just not in the real world. But silent partner in general would be you invest in something and let the people that are running the day-to-day operations generate a return on your money.
That's like the same thing as like passive investing or like passive real estate investing. You're just investing in somebody else's fund. They're doing all the work. You're just providing the money, and you're also limited partner, right? So like you can't even in some situations you can't even be involved in the operations of the business.
Exactly. Yeah. It depends on the structure, but yeah. So, for
Yeah,
people that are just looking to be, invest their money and get a return, it's what you would do there.
definitely. Mhm. Now, I want to talk more about your mortgage company. So I want to just kind of like understand something. Is it more of like you're the actual lender? So somebody comes and gets a mortgage, that you're actually providing the loan, or is it more of like a broker where like somebody's coming to you and then you're finding another lender and you're connecting them to that lender? Can you walk us through how that works?
Sure. Absolutely. So I've been in the business 16, 17 years now. I've worked for direct lenders.
Mhm.
I've worked for brokers. Our company here at First Choice Mortgage Advisors, we are an independent mortgage broker.
Mhm.
So what that means is kind of sorry, just like you touched on, we are going to go out to, 15, 20 different lenders that we work with in the marketplace.
Mhm.
And we're going to find the best product, the best pricing, best service. And we're going to take all of that into account for your personal situation. And we're going to kind of match you up behind the scenes with the bank that we're using. And I say behind the scenes because some people think a broker, so
Mhm.
I'm going to find the bank and then I'm going to pass you off to then go deal with them.
Yes.
And that's not the case. You're going to work with my team, with myself and my team from start to finish. You're really never going to interface, other than maybe signing some electronic documents that they send out with the lender. You work in a typical structure with the independent broker from start to finish. So, when I worked at a bank and I
Mhm.
had my team with me, you really, if you worked with me then or you work with me now, on the front ends as a consumer, you really shouldn't notice the difference between working with the broker and the bank directly. From a client experience, you may notice and hopefully notice a difference with a broker because we're tend to have more of a boutique experience and separate ourselves a lot differently from the large banks out there.
Mhm.
But from speaking for me personally, you wouldn't notice the difference. But that's what we kind of do behind the scenes is we find the best fit for our clients using multiple lenders.
Got it. And do you think that's an advantage for clients? Instead of going to one company, they can shop around and go through you, they can go through like 15 different companies?
Yeah, I mean, absolutely. Does anybody think a monopoly is a good thing, right? Like choices are good, right? We want to have choices because when there's choices, you just typically there's more competition. There's just a lot more just options, for lack of a better word. So nothing against the banks or any. There could be some great banks and direct lenders out there,
Yeah.
and there are. But things are cyclical.
Hmm.
Sometimes you have operational changes within a company that might have been an amazing company, but somebody leaves and now they've got somebody new, so there's some hiccups, growing pains. Well, what if you're doing your loan at that time? Do you want to be caught up in that? Or
Hmm.
we're in a market right now where interest rates are at historic lows.
Yeah.
So one of the biggest things we're seeing is capacity issues. So many people are refinancing, so many people are buying homes, and there's only a finite number of people in our industry to service all this. So a lot of people are just inundated, and they're not able to handle the business that's coming in. So we're able to pivot as we see, some of our great partners and banks out there kind of struggling to keep up, but we're going to
Hmm.
move away from them until they get, a handle on things operationally. So there's just reasons, sometimes in order to catch up, these banks will kind of push their pricing up a little bit higher, because if you price yourself out of the market, yeah, you might take in a few loans if people aren't shopping around, but you're going to slow things down because the people that are shopping around probably aren't going to use you. So banks will strategically jump in and out of being in aggressive pricing modes to structure their volume for their operational team. So if you're working at a bank and they push their pricing up because your operational team is stretched thin, well, that's kind of a bummer, because that's all you have to sell is that one product. So for me, when we see our banks that we work with start to increase pricing to control capacity, we're able to quickly pivot and kind of put those guys on the shelf for a little bit. So lots of behind the scenes stuff that we navigate as independent brokers.
Hmm.
And I've been in the business 17 years. I've worked for both. I chose to open and
Hmm.
become an independent broker because I do feel like it's the best model for the consumer.
And we're kind of the same way too, like in financial services. Like for example, like I was on your podcast and we talked about like bank on yourself and infinite banking. Like the use of that is typically with the use of dividend paying whole life insurance. And some agents are captive agents where they can only work, for example, with one company like Mass Mutual or New York Life or Prudential. They can only offer that one company. Whereas we're like you, we're independent brokers. We represent typically three insurance companies, but we could in theory represent, there's really no limit to how many we can represent. So obviously, I agree, because we see that also as an advantage for clients, because we're not tied to one company and one of their rules. Now, as far as underwriting goes, I know there's a lot of federal guidelines right behind the underwriting of mortgage products. Do certain companies have their own ways of underwriting? Like for example, like one company would say like you need 2 years of like work experience or 2 years of work history, whereas another company would say like 1 year, or are they pretty standard across the board?
Well, that's a great question, and that's also one of the benefits of being a broker is,
Yeah.
companies will have their own. Well, let me back up. So,
Yeah.
from a broad perspective, industry wide, there are some underwriting guidelines that are set for the industry.
Hmm.
So, in other words, conventional loans will be the guidelines you'll either follow would be set by Fannie Mae
Hmm.
or Freddie Mac. Goofy names, but I don't know. I didn't make it up. So Fannie or Freddie, as we call them in
Yeah.
the biz, they set these industry guidelines. And what those guidelines allow investors to do is they allow investors to securitize and sell these mortgage-backed securities in bulk. So if you can all agree, as investors are coming to buy, your mortgage is an investment for a bank or a hedge fund. So if they want to buy that, let's say $100 million in mortgages, I don't want to look through every mortgage to see if Sari had his W-2s in there,
Yeah.
and all this stuff. So as an industry, we follow these guidelines to allow banks to quickly, sell and trade the mortgage-backed securities. So those guidelines are industry wide, and they're set and they're in black and white, and most banks will follow those guidelines. You have a second layer on top of that where some banks may say, well, these are the agency guidelines, Fannie, Freddie, FHA, VA. There's a handful of them depending on the loan you're doing. But we're going to, as this bank, impose our own overlay, our own layer of additional guidelines on top of this. So, for example, maybe Fannie Mae says, well, we'll do down to a 620 credit score. You may work for a bank that says, well, our minimum criteria is 640. So there's a little bit of both going on there. You have the agency guidelines,
Yes.
which the industry is going to follow. You have some banks that may have their own guidelines, and then banks that may come up with their own products. It's the bulk of the industry is following the agency guidelines, and then you have your kind of one-off stuff. If a bank has a different product that'll be outside the box to pick up some of the stuff that the agency guidelines don't want to take. So there's a combination of everything going on, and that's why it's really important to work with a broker, because we're able to, one bank may say no, another bank may say, hey, we will take this 620 credit score or 580 and all kinds of different things. So it's a little bit of both, but from the most part, there's underwriting guidelines for the industry that most of the banks are going to follow.
That makes sense. Yeah, I see what you're saying. That makes sense. What are some of your specialties the types of loans you work on?
We do a lot of, conventional loans, FHA loans for first-time home buyers, VA loans for veterans, anybody that has served. Those are great loans, the VA loans. We do a lot of those. We also can do some, which are more niche renovation loans where people are purchasing a home and it needs some repairs. We tend to find a lot of people stay out of those products. So the renovation loans are a big niche for us as well. And, that's, generic stuff. And then the renovation loans. And we also have some niche loans for self-employed borrowers. So, if it doesn't fit the box and maybe you're not showing the income that you need to on your tax returns, there's some alternative products. They call them non-QM or non-qualified mortgage products out there. So there's some nice outside the box products that we have in that space as well.
With non-QM, is it like could you get the same rates as FHA and conventional, or are they typically like higher interest rates?
No, you're once you go outside of those like conventional box or FHA VA, you are going to pay a premium because the bank is taking on more risk, because typically with the non-QM loans, that means the bank is it's not easily saleable because it doesn't meet the agency guidelines.
Gotcha.
So the bank is pretty much, guaranteed to portfolio or hold and service that product. So there's a bit of a premium built into those products.
And that makes sense. It definitely makes sense. Like sometimes for example, I'm working on a case right now for one of my clients, and he has I forgot what the exact numbers were, but he has about $500,000 in equity in one of his homes, and he's going to leverage to do a cash out refinance. He sees the benefit of doing so with interest rates being so low, and he could deploy that capital other places. What's your opinion on that? Like using equity out of your home for other investments? And this is kind of a two-part question. So that's one part. And the second part is what's your opinion on good debt versus bad debt?
Sure. Well, I'm definitely gonna tread the compliance line here and say, talk to your financial advisor about any investments that you want to make. I'm certainly not licensed to give financial advice. So that's up to everybody's personal risk tolerance. I mean, the only thing I would say is money's cheap. I mean, we're seeing interest rates in in the 2s and 3s. Low 3s. So, I mean, use common sense, if you can, deploy your capital in other areas and get more of a return and not put yourself or your family or whatever at risk,
Yes.
I think it's a good time to explore those options. I mean, home prices are up, 20-30% in some markets just over the last 18 months
Yes.
since the pandemic hit. So, you have this combination of this asset, and I will call a home an
Hmm.
asset. And, I know there's, differences of opinion there,
Yeah.
but, you have this asset that's worth money, that has appreciated, and you can borrow against it at some of the lowest rates in history. It's a good time to look at that, to potentially invest in other things, invest in a business, invest in whatever it is that you may be thinking you need some capital for. It probably will not get cheaper than the money we see today,
Hmm.
and in the 2%, to whatever it is, mid twos, high twos. That's where people are borrowing money on these conventional products. So then there's, good debt, bad debt.
Hmm.
If your home has appreciated and you have equity in it, and you're paying 19% on your credit cards
Yeah.
because you have all these different credit cards. Well, I'm going to go ahead and say that is some bad debt, right?
Yeah.
You want to get that cleaned up. You're not getting, first of all, the interest rates are outrageous.
Hmm.
You're not getting a tax. There's no tax benefit to the interest that you're paying on
Yeah.
your credit card. So you could talk to your financial advisor or
Hmm.
accountant, licensed CPA. You can talk about the tax benefits of home ownership and the interest and what you can do with that. It'll be a little different for everybody depending on your earnings, but there could be some advantages there. So, if you have other debt, student loans, like you said, credit cards, anything that's at a higher interest rate, you may want to look at consolidating. It's probably, I mean, I've been doing this 17 years, and I've talked to people. My business partner here has been doing it almost 30 years.
Hmm.
We have never seen interest rates this low.
Yeah.
So if you have money out there that's leveraged in other places, and you have a lot of equity in your home, which most people do now, given where the market is, it's a good time to look at, reallocating, your debt, restructuring things, and, possibly, as you said, taking some capital to make some investments.
Hmm. Yeah, it's almost like, for example, like even banks do this, right? Like, for example, when you get a loan from a bank, it's not like they're giving you that money out of their vault. They're typically leveraging that money from other places. They're either borrowing it from bigger banks, or they have investment backed securities, so that they're raising capital that way, and they're selling it to you at a higher rate, and they're earning a split between it. It's like when you go to a store, for example, a wholesaler, and you buy a product and then you sell it at retail, there's going to be an increase in price. And I think that people could apply those same strategies. Like, you can go to your home, buy at 3%, and then you invest, with the guidance of your financial advisor, your CPA, everything's in alignment with that, and you're taking on the appropriate risk. You buy at 3%, and then you're selling, for example, at 10% in different investments. And now there's a split of like 7%. So you're buying from one place and selling at another place. That's my opinion, as a financial professional, that's my opinion on what you could leverage the equity in your home with.
Yeah, and I get a lot of people that talk to me. They say, "Oh, here we go again. We're everybody's home prices are up. They're going to take money out, and everybody's going to be upside down." Um, I mean, I don't have a crystal ball,
Yeah.
but I did sit down and have the opportunity to talk with somebody that has won the Crystal Ball Award with Zillow for the most accurate real estate forecaster in the country. Not once, not twice, but three times. Barry Habib has, won this award for his accurate real estate predictions. And I sat down with Barry last week, and I mean, he's one of the talking heads on, CNBC, Fox Business. You'll see him everywhere. He's very bullish on the housing market. I mean, he just says, "Hey, look, we're not in this bubble that's going to crash, or
Yeah.
we are, supply is just going to outpace, the demand is just outpacing the supply."
Yeah.
There's a lot of factors at play. There's the average, earnings in this country has gone up.
Yes.
The birth rates in the country have gone up. So there's more people, that are out there looking. There's all of these things that are driving it. The banks are not lending. When I got in the business, you could, as I said in the beginning, fog a mirror, you got a loan.
Yeah.
It's not the case. I mean, there's underwriting guidelines. You need down payments, even in the non-QM space.
Yeah.
Non-QM is a nice word that if we were to take non-QM and put it back in early 2000s, it would be called subprime lending.
Okay.
But if you put that out there today, that is a dirty word. You wouldn't want to be the one that's out there pushing subprime lending.
Yeah.
It's a non-traditional, lending. Subprime lending, whatever you want to call it, non-QM, it's a responsible product in this day and age. I mean, they want money down, they want credit scores, they're going to make sure they have a good equity position. In early 2000s, they'd lend you 110% of the property value. So we're in a different time, and the banks have guidelines in place. The demand is there. So, I don't see, and the people who do this for a living and forecast and study the markets, they don't see us in an area where we're leveraging our homes, where we're going to do all this stuff and things are going to crash. Could there be a little bit of a peak and we start to plateau and things? Absolutely. But I would feel pretty comfortable leveraging equity in my home to do other things. I've done it. I mean, I'm doing it now for various purposes. And, so I think it's a great resource for those of us, especially given the times with the equity people have in their homes.
And you mentioned a good thing, a great thing, Chris. You mentioned about how like people are predicting, like a lot of people are kind of thinking that there's going to be another 2008 crash because it almost seems artificial, like how values are shooting up and interest rates are going down and people are buying left and right. Like we're in the process right now of closing on a home, and we had to look at like 60 houses, and we know about 6 out of those 60 houses we put offers on, and like people would bid way higher than us. And our realtor was like, yeah, it's because they got outbid by other places and now they're just fed up. So they're just, if a house is listed for 320, they're gonna just put 340, pay the extra money and just move on with life because they need to move. They're in a situation where they need to buy, they need to move. And I think that it would lead people to believe that something bad is going to happen when people are thinking that way. But you're right. I think there's going to be certain corrections that will happen, but it's not like black and white where it's going to be one way or the other way. It's going to be great or completely bad. I think that there's going to be some corrections, but it won't go back to 2008 because of so many other things that are taking place, like the guidelines, the way that banks are underwriting, the national income per capita, all these other factors that are completely different than pre-2008.
Yeah, I mean, 1,000%. The funny thing is, homes are more affordable now than they were then because the average median income is up. So you have the income is up, the interest rates are down. So if you look at home affordability, as we're in this market where everybody says, oh my goodness, I can't believe Sari paid this much for that house.
Yeah.
Do you know that home today, or what you're paying and what people are saying, oh my gosh, is more affordable than it was in 2008. So people are using less of their household income towards housing than we were back then. So you have to really look and dive into this. You can't just look surface level and say, oh, here we go again, because people are overbidding and there's not enough supply to meet the demand. There's a lot of factors at play here. So you can do a deep dive into that, but I think look, everything's cyclical. Stocks, housing. Yeah. There will be a slowdown. There could be a correction. There could be an inflection point where things change. But I don't believe in people that are way more in the trenches than me with forecasting. Do not believe we're in a bubble that's going to or a crash.
Definitely, yeah. Well, Chris, I really appreciate it. I liked our conversation, and I look forward to having you back on the show. Before we go, can you tell listeners how they could reach out to you and learn more about you?
Yeah, absolutely. Well, I mean, you can definitely, find me on any of the social media platforms. Chris Swartz _mortgage_broker on Instagram, and that's Swartz SWARTZ. Same thing. You find me, on the social media platforms. You can also check out fuelthepodcast.com. That will take you to our Fuel podcast. And, probably the best way to find me any really of the social media platforms. You can shoot me an email, Swartz at firstchoicema, like mortgageadvisors.com.
Mhm.
And, any of those platforms, you'll find me. So,
And I'll be sure to add in all the links you mentioned in the show notes so that way listeners can just click and connect with you. Oh, real quick too, what states can you help clients in?
so right now we're in the tri-state area in the Northeast. Pennsylvania, New Jersey, and Delaware is where we're licensed. Probably early into, as we're recording this, in October of 2021. Probably as we head into next year, 2022, we will be licensed to help people in Florida as well.
Okay. If somebody, for example, like is in California or Illinois, could they still reach out to you just for advice?
Absolutely. Yeah. Like I said, a lot of this stuff, the guidelines are the same across the industry.
Mhm.
I'm also involved in a very high level mastermind group connected with lenders, brokers, all over the country. So if I can't help you, chances are I know somebody in you that's licensed in your state, and I can put you in contact with somebody that would take great care of you.
Okay. Sounds good, Chris. Thank you so much for joining us, and I look forward to having you back on the show.
Yeah, absolutely. Thanks for having me on. And I look forward to coming back.
Thank you. To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN, assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.